If I had ₦1,000,000 today in 2026, I would buy these 6 Nigerian stocks. We are already in the last 2 days of February 2026, and if you are serious about building wealth in Nigeria this year, timing matters. Many Nigerians believe you need millions upon millions to start investing in the stock market, but that's not true. What matters more than the amount you have is positioning. If I had ₦1,000,000 to deploy in today's Nigerian market, I wouldn't scatter it randomly. I would allocate it strategically into sectors that are benefiting from economic momentum, government policy shifts, and strong cash flow trends. In this video, I'm breaking down the 6 Nigerian stocks I would personally consider, plus the sectors driving their potential in 2026. But before we go any further, let me clearly state this. I am not a financial advisor. This video is for educational and informational purposes only. So, remember that investing in stocks carries risk. Do your own research and consult a licensed financial advisor before making any investment decisions. So, let's get into it. First, why does sectors matter more than hype? Smart investors don't just chase stocks, they follow sectors. In 2026, a few sectors in Nigeria are standing out. Consumer goods sectors, healthcare or pharmaceuticals, banking sector, telecommunications, and real estate or REITs. Why? Because money flows into industries before it flows into individual stocks. When government policies support certain sectors through maybe tax incentives, reforms, or regulatory adjustments, profits can expand faster. And when profits grow, investors pay attention. So, if I had ₦1,000,000 today, here's how I'm going to think about deploying it. The number 4th and 5th stock on this list is something I won't joke with. So make sure you stay glued to your screen and see why I would key into this very fast. First on the list is Zenith Bank. If you have ₦1,000,000 to invest in Nigeria in 2026, this first stock I would recommend you look at is Zenith Bank. And here is why. When you are building wealth, you don't just start with speculation, you start with strength. Zenith Bank is one of Nigeria's most established and profitable Tier 1 banks. This is a company that has built a reputation for strong earnings, disciplined risk management, and consistent dividend payments over the years. In 2026, the banking sector remains central to economic activities. When businesses expand, banks borrow. When individuals save and transact, banks earn fees. When interest rates remain elevated, banks can also benefit from stronger margins. Zenith Bank sits right at the center of all these activities. What makes it attractive in a ₦1,000,000 portfolio is large deposit base, strong corporate banking presence, international exposure, solid capital positioning, and history of rewarding shareholders. This is not the kind of stocks you buy because it's cheap. No, it is the kind you buy because it is reliable. If Nigeria's economy grows in 2026, Zenith Bank doesn't need any extraordinary events or miracles to perform. It simply needs normal economic activity to continue. So for me, this would likely be one of the larger allocations in the portfolio because strong banks tend to anchor portfolios during market volatility. When you start with quality, you reduce unnecessary risk, and that matters. Personally, I actually bought on 4th of January 2026 at 65 naira 2 kobo per share. Today, February 27, 2026, it is trading at 89.00 naira. Do the maths and we are just starting the year. Now, the next on the list is UPDC Real Estate Investment Trust, or you call it UPDC rates for short. This is real estate, but in a smarter way. UPDC rates allows you to earn from property income without buying land or managing tenants yourself. So instead of building houses, you buy units in income-generating properties. In 2026, real estate remains a hedge against inflation. Rental income structures and asset-backed investments provide stability when markets fluctuate. Currently trading at 7 naira 80 kobo, if I had ₦1,000,000, I would allocate a portion here for stability and dividend potential. To be honest, REITs are not usually explosive when it comes to growth plays, but they are foundation builders. So think of this as calm engine of the portfolio. Now, third on the list is NIMET International Pharmaceuticals. Healthcare is not optional, it is essential. Pharmaceutical companies benefit from consistent demand. In addition, Government policies supporting local drug manufacturing and tax incentives for healthcare firms could strengthen margins this 2026. When companies pay less tax, they retain more earnings, and when retained earnings grow, expansion becomes very easy. When expansion happens, valuations can improve. Currently trading at 11.7 naira, if I had a million naira now, I would definitely want an exposure to healthcare because demand doesn't disappear during economic uncertainty. Healthcare is defensive actually, but in emerging markets like Nigeria, it can also be growth driven. Next on the list, which I would never joke with, is MTN Nigeria. This is one about dominance. MTN Nigeria controls a massive share of Nigeria's telecom market. Data consumption keeps rising. Data is life, right? Data is oxygen, right? Digital payments are expanding, airtime usage remains strong, and mobile connectivity is deeply integrated into everyday life. Some investors say MTN is expensive. Well, when you compare that to smaller stock, you are right. But this is the real question. Would you rather own thousands of weak shares or a smaller number of a dominant cash-generating company? I'll leave that to you to answer. For me, I bought at 653 naira per share on 12th of February. Today, which is 27th of February, it's trading at 760 naira per share. If I had another 1 million naira, MTN would likely take a larger allocation than the others because it has market leadership, strong revenue base, dividend history, and also digital expansion opportunities. This would be on my core holdings. Now, another one on the list is Nigerian Exchange Group, NGX Group. This is actually a strategic play. When more Nigerians invest, when market participation increases, and when listing expands, who benefits? It is the exchange itself. So, NGN Exchange Group or NGX Group earns from trading activities, listings, market services, and the likes. If 2026 continues to attract retail and institutional investors, exchange-related revenues can improve. It's like investing in the platform of the market. If bullish momentum continues this year, I would definitely want an exposure to NGX Group. Now, sixth on the list is McNichols Consolidated, or you call it MC Nichols. Consumer goods right here, they thrive when spending increases. This company processes food. They produce granulated sugar, cube sugar, icing sugar, baking sugar, chocolate powder, custard powders, and cornflakes. As inflation stabilizes and purchasing activities improves, companies in this consumer space can actually benefit from volume growth. If tax incentive or policy adjustment supports local production, margins may also expand further. Now, currently trading at 8 naira 47 kobo, lower priced consumer stocks can sometimes move aggressively when momentum kicks in, but they also come with higher volatility. Now, this would be my calculated risk allocation within a million naira portfolio. Now, remember, high risk, potentially high reward. So, how am I going to split a million naira portfolio conceptually if I had a million naira? The first is going into the banking sector, which is the Zenith Bank, taking 30% of that million naira, which is 300,000 naira. Now, this is the foundation of the portfolio. It has strong earnings, dividend histories, and it's also a tier 1 stability. Zenith Bank acts as the shock absorber during volatility while still offering growth potential. The second one is MTN Nigeria, which is going to be taking 20% of the 1 million naira, 200,000 naira. It is in the telecommunication category and it is a cash flow engine. Telecom is embedded in everyday life, everyday Nigerian life. Talk about data, calls, fintech, digital payments, and so on. This is your dominant cash generating machine. So 20% goes into this. Naimet International Pharmaceuticals. Naimet is going to be taking 15%, 150,000 naira, because the category is healthcare, policy plus demand play here. Healthcare demand is constant. Potential government incentives plus local manufacturing growth is on the upside. Now, the next one is MC Nichols or McNichols Consolidated. 15%, which is 150,000 naira of my 1 million naira is going into this. The category is consumer goods, and this is a momentum play. Consumer spending recovery plus lower priced stock momentum potential. Higher risk than Zenith Bank actually, but a higher upside potential. Next on the list is UPDC Real Estate Investment Trust. I'm going to be taking 10% of my 1 million naira to invest here. The category is real estate and it promises stability plus dividend. asset-backed exposure. It helps balance volatility from smaller growth plays. Now, final one is the NGX group. 10% is also going into this, which is 100,000 naira. The category is market infrastructure, and it has to do with volume play. If trading activities increases in 2026, the exchange also benefits. Now, why does this allocation work? 50% in strong dominant companies like Zenith Bank and MTN, 30% in growth-oriented sectors like healthcare and consumers, then 20% in stability and structural exposure, rates and the NGX group. This balances because we have stability, cash flow, growth, policy advantage, and also economic participation. It is not overly aggressive. It is not overly defensive. It is just strategic. That's the word. Why should you diversify actually? Because no one can predict the market perfectly. But you can position yourself intelligently across sectors benefiting from growth, policy, and economic activities. The bigger lesson here is, this video is not just about the 6 stocks I've mentioned. It's about understanding why money is flowing in 2026, where money is flowing, which industries benefit from the policies, how to allocate your capital strategically, why waiting for perfect timing often leads to missed opportunities. See, many Nigerians say, I will invest when I have more money. But wealth isn't built by waiting. It's built by starting early, staying consistent, diversifying wisely, and managing risk. ₦1 million today invested intelligently can look very different in 3 to 5 years if positioned correctly. So, once again, I'm going to repeat this. I'm not a financial advisor. This content is for educational purposes only. The Nigerian stock market carries risk. It includes risk of losing your capital as well. So please, conduct your own research, study company financials, review market trends, and consult a licensed investment professional before making any financial decision. Make sure you like this video, subscribe to Investive, share it with someone serious about building wealth, and tell me in the comments, if you had ₦1 million today, which sector would you bet your 2026 on? My name is Steve, and this is Investive Channel. I'll see you in another one.